Yeah, so we're just going to mention, actually, we did bring some packages. We didn't hand them out because we do have folks that are starting out a business, that's these folders right here, and folks that are existing and potentially growing or expanding. So that's right here. So we'll leave that till after. You guys can take a look and see, grab a folder and grab some information. But so first of all, I wanted to thank Jason for having us and giving us the opportunity to speak to you tonight. You know, in terms of this opportunity, obviously it's very great for you and a great learning opportunity, and we're great to be a part of it and to invest in it. So, so thanks again for having us. I want to just tell you about a little opportunity I had to meet with a famous individual. But secondly, I just want to wish you all the best of luck in your new and existing business endeavors, and hopefully you can get some value from the session tonight. But had an opportunity last year during Small Business Month to see Arlene Dickinson from Dragon's Den. Do you guys all know Dragon's Den? Yeah? So you know Arlene Dickinson. So on top of the amazing experience that it was, and I got my picture taken with her and got her to sign her book and everything, what really stood out for me was her persistence and her perseverance to really overcome all of her obstacles, and she told her life story, and it was amazing. And you know, it stuck with me because you know, starting out small businesses or starting out businesses is very difficult. It's tough, and you really do have to stick with it, and hence, you know, of her success, she's very successful now to date. So wanted to just share that, just because stick with it, you know, you've got the ideas, and this type of session and learning can really help you become more successful. And really all of the business management principles are the same for all businesses, and so just wanted to share that. Secondly, I'm going to go over the agenda here. And so whether you're just starting out or planning on dominating the international market, the essentials of building a successful business are the same, and we're going to cover that off. So Angela is going to talk about the business and personal balance. She's going to talk about building and creating and maintaining a successful business plan. I'm going to talk about cash flow and ensuring the funds that you'll need to have when you need it, and to source out the right type of financing and what is the right type of financing. And then she's going to end with preparing a business application and developing and holding on to a strong support team. I did introduce myself, he introduced me, but I'm Sherry Kane, Sales Manager, Small Business with Alberta South. So I manage 8 business account managers, small business advisors, as well as personal, throughout the Alberta South market. And I've been with RBC for 20 years, and so I've done half of probably my career in sales and the other half in management. And I'm really excited to be a part of getting to know the small businesses in Alberta South, and I'm learning a lot about business. And I grew up in a small business household, and my dad's always been self-employed, so I've been exposed that way, but I really get to learn specifically about the businesses and your businesses. So just to let you know who Angela is, she's one of my direct reports, and I get the pleasure of working with her every day, and so she looks after providing business advice and personal advice to our small business clients. And I'll just pass the floor over to you. She can tell you a little bit more about herself.
So hi everybody, I'm Angela. So I've been in banking with actually RBC for almost 15 years, majority of it on personal side. Moved into this role just over a year ago, so definitely adding the new business portion to it. Exciting though, because my husband's family operates a small business in Lethbridge, so it's nice to be able to share some tips of how I can better their business. And that's probably the most exciting part of my job, is working with people like you, business owners, people trying to develop their business. How can I help you achieve your dreams? So that's the most rewarding part of my job, and the most fun about my job is working with all of you to get your goals. So
So let's get started. So Angela's going to take us through building the business and personal balance, as Jason mentioned, so important. And I'll let you take notes.
So balancing your business and personal. So as Jason mentioned, that is an important role with RBC. We are one of the financial institutions that found some significant importance in it because it does. You want to view them as separate entities, but they do intertwine. It does not matter how we propose what we do to keep them separate. Our business is personal, or personal is business. They just link that way. So a couple different things to think about as you're trying to structure your business and benefits for it is, are you going to have better benefits as a sole proprietor and partnership? How do we look at that banking wise for you? Basically, in that sense, everything intertwines. There's no separation. All small businesses, as long as you're a sole proprietor, everything crosses. So income is all how it's claimed the same. Loans are paid personal business. They're all essentially the same. There's not any cross. Incorporated, however, then your income is separate, your taxes are done separate, your revenue is done separate, financing is pulled separate. However, personal is still viewed for backing purposes. So how to get a good balance of your business and personal banking, where your personal comes intertwined regardless of what kind of business structure you have. An important thing is to maintain personal levels of savings. So whether you're doing RSP contributions, taking advantage of tax credits, tax savings accounts, definitely a huge thing for advantage, and keeping your investments diversified. So I had the I guess luck today of going to a succession planning session prior to doing this today. And one of her comments was, which kind of resonated with me because it was a big number, 50% of your income you need to rely on as you become a senior member in your business needs not to be from your business. So meaning you need to have 50% off of what you're living off of outsourced from your business. So that's your own savings, that's your own cash flow, that's completely separate from the business. Because if that business is gone, where are we sourcing our funds from? So we need to make sure and find that happy medium to make sure both are being successful for us. So the old term, don't put all your eggs in one basket, don't dump it 100% into your business. We want to work with you guys to make sure it's diversified out. So that cash flow that Morley was showing, if you have those 3 months of negative activity, you have something to back yourself personally, so when your business isn't outputting to your wages, you can sustain your lifestyle for it that way. So business plan, I know you guys have probably worked this to death, but just to touch on it again, your business plan is not just for starting your business. You want to maintain that business plan. It's essential for, as your business grows, to make sure you are identifying your right customer base. Your market plans are still meeting what you had originally set out as. Maybe you need to adjust them. Maybe there's a new market you're venturing into. Keeping up with your competition. What else is coming in the market that's maybe adjusting where your revenues are going to. So continually keeping your business plan, think of it as a blueprint. So it's the blueprint of how you've started your business. So no different than a house, it's a work in progress until it's built. And once it's built, then you move on to the next bigger thing, right? So, or you add something to it, or you have renovations next time. So think of it in that respect, that you've got lots of multiples, same thing as your cash flow projections. You do it based your first 2 years on what your estimated outcomes are. After year 1, adjust year 2 that you had previously done, and keep going. It's a continual work in progress. So make sure you keep it up to date. It's important to it helps manage your operations. It's going to help you find opportunities, to save time, potentially reduce costs, manage your inventories, supplies, staff, what kind of things need to be adjusted that you originally set out. So it's super important to keep building with that, and then keep working with your business plan your business plan and your cash flow.
And I know you guys have heard about cash flow tonight. Cash flow is king and how important it is. But I'm just gonna go over a few points. So over time, you know, forecasting is going to become easier and more accurate for you. And it'll help, you know, with future projections and being able to adjust to seasonal and economic factors. Time will also help you determine how much you need in reserve, how much you need to keep in your accounts, how much you need to borrow from lines of credit, that type of thing. Consider some advantages of online banking. Online banking, of course, provides you with a single sign-in. First of all, if you're dealing with RBC, it's your personal and your business, actually. You can sign in one access. Move money between your accounts, so it gives you that ease, convenience, and you know, being able to just do that anytime. Track who you've been paid, so making sure this is important because, of course, your accountant's going to ask you for this information. And online banking will archive, and you know, different institutions can vary, but ultimately for RBC, I know it's 7 years, so you can go back 7 years in your statements and just be able to go online and get them, as opposed to going to the bank, requesting them and paying for them. So real key. Another thing too is it makes it easy to download into some of the accounting programs, and you know, if you're going that route and you don't have you want to do some of your own bookkeeping, or if you have a bookkeeper, that's important. There's also you know, partners that we have that you can actually have your accountant or your bookkeeper have access to some features in your online banking. We call it RBC Express. And it's a valuable service. So there's options like that will make your life easier to keep track and keep control over that cash flow, because it, as you know, cash flow is king, right? It can also protect you against fraud. Not only are you able to kind of view it at any time, but there's different alerts that you can set up to have it so that, you know, if there's large withdrawals or what have you, you can actually have it trigger and send you a message. So there's different things like that you can protect yourself against fraud. So the next thing, saving money on fees, transactional fees. So as you know, business is a little different than personal. Business is a little bit more expensive than personal, but you do have an opportunity to write that stuff off. So always be keeping track of all of your receipts and all of that good stuff, because it can actually save you in the end. So saving on transactional fees, an opportunity for you is you can use a credit card for your transactions as opposed to your actual account. As you know, you don't pay transactional fees on credit cards, and then of course be transferring money over. Lines of credit and overdraft protection can also save you from fees as well. The business credit card is also a really effective way of keeping your business and personal expenses separate. You know, to please your accountant, because your accountant really does want it separately, unless you are a sole proprietor. Okay, so just some things to keep in mind. I heard Morley talk about accounts receivable, and definitely keeping an eye on that. If you do offer credit, make sure that if an account is overdue that you follow up quickly, because you can obviously identify when there's potential financial trouble in some of your customers. So, you know, that's something to definitely keep a handle on. And the sooner that you're proactive with that, the sooner that you can potentially come up with a solution that works for both your customer and your business. So that's a key message. One of the other ways you can avoid credit issues is the electronic channels. Now, here we talked about the online banking, electronic channels, RBC Express, but giving the option for your clients to pay with debit or credit cards. So having a point of sale machine potentially, if you are selling a product or service. can actually provide within 24 to 48 hours direct access to deposit that money into your account. So a really good option to provide to your clients and worth the money to do so. Payment delays from customers are the key of the cash flow issues for businesses. Even the most carefully thought out business plan can be thrown off by a sudden, unexpected expense. And so maintaining a contingency fund is important. And, whether that's, having money in your account or having an available line of credit.
I have a question. So when we talk about accounts receivable, if I want to check on somebody's credit, so they want to charge something, and I want to check on the credit, is that a service that you offer
No.
through the bank?
No.
No.
You would have to set something up through Equifax or through TransUnion.
No.
And I know that RBC has it for the clients that we do credit applications for, but that would be something totally separate. If you can avoid offering credit to clients and have some other type of incentives and other payment options, that can be the better way to go. And when I say on credit, it's not having them use a credit card, right? It would be to be paid to you later. Yeah, exactly. And if you are making big sales, definitely maybe ask for a deposit, right, for those big ticket items.
I was just going to add to that.
Yeah.
If you're going to be doing something like that, you need to be really careful with when you pull credit reports on people. You need to be registered with Equifax and TransUnion, or the two companies, or one of the companies at least. And you need to be really careful if you're going to be pulling credit on people, because if you don't make them aware that you're doing that, and you get multiple people that do credit checks, they're called hard credit checks, it's going to ding their credit every single time you do that. So for most people,
Somebody told me that once. I think it was you, Angela.
yeah, and it's for credit-seeking behavior, right? They don't want people going from place to place to place to place to place
Yeah.
to apply. So you just need to make sure that if you're doing that, you're totally above board, and that's why banks get you to sign agreements that say we're pulling your credit report, and that's why it belongs to the bank. Or if Community Futures pulls it, we can't give it to anyone because it legally belongs to us.
Oh.
Just the same way, like when we pull it, we can't technically give you a copy of it because it's property of RBC, even though it's in relation to you. So, and your business has a credit bureau as well. So once your business is established, that follows a credit bureau also. So first time for any of you that are just starting up, obviously you're not gonna have anything in place yet. As soon as you start borrowing, as soon as you have, say, a UFA gas card, co-op gas card, those kind of things are gonna start reporting. If you carry credit with any of your suppliers, that can potentially be reported. So it's, again, very, as much as personal credit is to stay on top of it, business is just as important because it can have the same negative effects on you. So
And having a telephone bill in a business name, I think also reports, so that can help too. Now that all of our cell phone bills and everything reports to our credit bureau. The other things to make sure that you keep an eye on is, so we talked about accounts receivable, but inventory levels, in terms of the inventory, you want to maybe set prices based on maybe demand. And so setting a higher price maybe for the items in higher demand and setting a lower price for those slow movers. The other thing is matching the customer and supplier terms, so that can help with your accounts receivable. So, setting those days, I heard you say 2-10, things like that, where you can either have incentives or to just match those, because you do want those to coincide with each other. And ask for deposits. I mentioned that already. Make daily deposits as opposed to deposits once a month, because obviously the daily will give you access to that cash flow. We have through RBC Express, there is now a machine that you can actually do your deposits at your business. So it's a machine that will actually take your deposit slip and your checks and make that deposit for you. Of course, you all know about mobile image deposits. I'm sure all the banks are doing that now. So that's some other options for you to do the daily deposits. And then that was pretty much it for those pieces. Wanted to talk about what we look at and what we analyze financially. We call them the cash flow drivers. And I'm way behind here. Okay, so you heard Morley talk about sales. He talked about cost of goods sold, accounts receivable, accounts payable, inventory, operating expenses, capital expenditures. So these we analyze and provide business advice around. Year over year trending gives us a good indication of where we can provide advice in areas. For example, sales and cost of goods sold. A lot of these have inverse relationships and they're all sort of interrelated because in some cases they can affect each other. So for example, if your sales are down and cost of goods sold is up, what's happening with maybe is there's some inventory issues, supplier issues, things like that. And then operating expenses, if there's an increase in operating expenses, identifying where those increases are and why are there increases. We're going to look at some further analysis here in one of the tools that Angela had made up for us. Accounts receivable and accounts payable, as we said, there's that matching of the supplier terms, so you want to, those have an inverse relationship. And inventory levels, and then the effect of capital expenditures on your cash flow as well. So, okay, let's go back here. So I'm just gonna flip here to the analysis that Angela had done up for us.
Alt-tab, should take you right over to it. Yeah.
And so what you're gonna see here is a tool that we have available to us that we use with our business clients. And what it tells us is basically on these 7 pieces, these 7 key drivers, where we can provide advice. And so what we do is we take 2 years of financial statements, and so what she did is she used one of our training modules and inputted all of that data, and then basically it gives us the advice, and then we provide that to our clients and kind of show them, because we can actually do specific numbers, and it actually does show specific numbers. So online, I apologize that you won't be able to see this, but Jason is going to email it out to you. So when it comes to sales, obviously the challenge is to find profitable clients, because good clients, generally have the need for the product or service and pay for the goods on time, etc. Now, while increased revenue from good clients can increase cash flow, it sometimes reduces the cash if the selling price or gross margins are sacrificed to achieve those sales. So in this case, I won't really talk about the numbers, but basically, based on the analysis of the cost of goods sold, this tool is telling us that the clients have to sell a certain amount of goods. Okay, so their sales have to be at a certain level for that following year in order to compensate for what the cost is to sell those goods. Okay, so that's one of the pieces of this tool. Another piece of this tool is the cost of goods sold. So this looks at gross margins. In this case, a good rule of thumb is to manage margins, obviously, and not to let cost of goods increase at the same time or at the same rate as the sales. So continue to manage that and concentrating on these key drivers, specifically supplier purchases, delivery of goods, services, inventory, freight, and labor. In this case, the margins actually decreased. So we like to show business owners when things are on the good side of. Operating expenses, so again, I mentioned sort of where we would identify specifically where the increase is. And from this analysis, they are advising us to say, okay, you know what, Mr. and Mrs. Client, maybe it's an opportunity for you to take a look at some of those expenses, and it mentions utilities, supplies, telephones, mileage, for example. are more likely to cause concerns. It's strongly recommended that you continue to monitor expenses if your cost of, or your operating expenses or what's known as overhead is in the negative. Understanding methods of payments, we talked about, you know, giving the clients the opportunity of, you know, paying us through electronic channels as well as how we as business owners are gonna pay for things. And so expenses can be paid using various methods. This actually outlines based on dollar amounts how they're paying for their business expenses. So, pretty neat stuff.
So it helps us determine a little bit too, if you're doing if you're having low cash flows, for example, we can identify and say, okay, you've got like 32%, for example, you're paying either by cash or check. So do those suppliers have opportunities that you can have a term of payment with them? So that'll ease your cash flow and allow you time to have your accounts receivable come in. So it helps us identify those areas sometimes as we're looking at loan options too.
Accounts receivable, in this case, so it basically talks about turnover in days of receivables and payables. In this case, this is the ideal scenario where they're receiving funds faster than they have to pay for them. So that's what you want to have, but that's not always the case. And obviously you're setting those terms with your clients is going to determine this piece. Okay, and then what you're providing in terms of options to pay, your clients are paying, you know, for their goods and services, and this just outlines here.
Keep in mind too, the more convenient you have for a client to pay you, the faster typically you're gonna receive your payments for your product, service, whatever that you're offering to them.
Can I ask you a quick question about using credit cards? Like, we have part of our business is interior design, so some of we end up buying a lot of product, and then at the end our invoice can be quite high, can be like in tens of thousands, that sort of thing. So in everything that I've seen in terms of offering a credit card payment doesn't seem worth it for a larger, well, they wouldn't be able to, I guess. Most people wouldn't be able to.
Well, yeah, especially because when you're talking those large amounts, like 20 grand, you do pay a percentage, right,
Yeah,
to the merchant.
large.
So, yeah, when we're talking those large amounts, that's not the ideal payment, but maybe, you know, a wire payment or something like that could
Email
be an
transfer?
alternative.
Email transfers,
Yeah.
for sure.
Yeah.
Okay.
RBC Express actually gives you the ability to pay your vendors as well, but actually online with RBC regular online banking, no additional fees, you can pay vendors up to your limits basically,
Yeah.
and then you can get a token that will actually allow you to go up to 25,000.
Okay.
Yeah, so it's a pretty cool feature actually. I really like this one because it talks, so accounts payable talks about an account review can help with the right account solution. So in this case, based on the number of transactions per month, it appears that the current transactional account is not suitable. Savings of 20,000 can be gained by switching to a different transactional account. So this tool actually tells us through an everyday banking review that they can save this much money on their banking fees by either switching to a transactional account, and then we would also provide the advice around, okay, let's look at your credit card usage. Could we, revert to using your credit card for some of those transactions? And what does that look like? And then it also talks about, so by taking that money, right, further discuss savings. It can be gained by switching accounts, and then you can take that money and invest it and then earn potential funds from there. So as shown, investing 78,900 of cash into a GIC. So either cash that you have to have in your account, or that's sort of your contingency fund. If you look at, well, I'm not gonna need to touch this, or even look at a cashable option of investing, you can actually then get more returns from having that money sitting in your account and looking at other options for it.
Which with doing a cash flow investment option, those months where you maybe at a negative cash flow, then you have the opportunity to pull from that surplus that you previously had. So just different opportunities to balance where the cash is, and then a little bit extra earnings that you can get on it as well.
So if I put my, can we go back there if I'm
Sure.
following correctly? So I'm gonna take this extra money and I've got it in a GIC, and I'm having cash flow problems one month, so I need to pull it from my GIC. Am I gonna get charged for pulling it from my GIC?
No. So say
Because
you
it's
have
a business GIC?
business, personal, it doesn't matter, because you go into you could, for example, this one that I had input in here is called a 1-year cash flow GIC. I can't remember the exact amount, whatever it was.
Yeah.
Say it was $20,000 we put in there. And so those 3 months that we were 1,000 one month, 2,600, 1,400, if you needed, we could pull out each of those 3 months, $2,000 or $5,000, whatever it is, to match up. Leave the balance in that GIC. We don't have to redeem the full amount of it. We can pull what we need,
And then you don't get charged for
and you
that.
don't get charged for it.
There's no fees for the GIC, whether you're redeeming or breaking or anything.
Oh, okay.
And then inventory, just the cost of carrying inventory, to avoid the drain on cash, ensure that you've got those inventory controls in place. And so it just talks about how many days, inventory days on hand.
And we can do this particular scenario was done just over a 2-year timeline. If you have more years that we can do it over, it gives a bit more accurate picture for you as to how things have progressed in a positive way or a negative way, and then we can evaluate it differently and advise around.
Generally, in terms of the financing of inventory, a line of credit is usually used. We just talk about that, and we would give advice to our clients. And capital expenditures, so the impact of the purchase of the fixed asset. So who out of all of you have to purchase equipment for your business? Right, so are any of you already existing in business? And no? Okay. So an option obviously is when you're looking at financing, there's different options. We're gonna go into the 2 types of financing options. But generally, you know, purchasing a fixed asset can have a big impact on cash flow. And so we just take a look at that, and in this case, it tells us the estimated number of months to recover that money. Okay. And again, this is just talking about investing surplus into a GIC and getting more for that. Yeah, that's it for the tool. So pretty cool, and it does, like I said, it can get into as much analysis, and she mentioned if you want to do more years, you can look at, you know, further down the road or what have you on there. Okay, I'll tab.
Yeah.
All right. So 2 main categories of financing. Short-term financing for needs of 1 year or less. Typically, you would see, you know, payroll might be paid from short-term financing, maybe some inventory, and accounts receivable. And then longer term financing for longer periods, typically we would see anywhere from 1 to 5 years, but that's, I mean, definitely there can be financing for longer terms. And the importance of why we talk about the right type of financing and the types of financing is because knowing what's available and matching the right kind of financing, so depending on what it is that you're purchasing, you know, we would advise the appropriate financing option for you. And then you can take advantage of maximizing the benefits and minimizing the cost, right? Okay, so short-term financing, to cover the gaps, folks use lines of credit, provides immediate access to funds. It's ideal when businesses are starting, as well as if they're fluctuating in cash flow. And, you know, emergency protection for overdraft, good to have so that in the event of fluctuating balances, you're covered for when those checks or payments have to go through. So in examples of long-term financing, term loans and leasing, both excellent for the big ticket items, so purchasing equipment, you know, frequently, rather than, we'll talk about leasing as well, but vehicles, office renovations, and usually repayment terms of, as I said, 1 to 5 years, but not limited to. Leasing, an option to purchase some of your equipment. Leasing would be appropriate for the frequent purchasing of equipment and turnover, as opposed to just purchasing it once. But there can be some tax advantages of leasing as well, which you should always look into. And then the Canada Small Business Financing Loan, so for major purchases and renovations, and it's 85% guaranteed by the government. There are some stipulations around, you know, how much you have to put down and such, but definitely, you know, where we couldn't do some of the other financing, this has been kind of a really good option for clients, and, you know, can be as little as, I think, 10% down payment, so it can be pretty lucrative for businesses starting out. And I know Community Futures, you do small business, right? And
Yeah.
small business financing loans as well. And then now, getting on to Angela's part, preparing for your business application. After we did all this analysis, she'll take it a little bit further.
So in these packages as well, we put in a checklist basically of documentation you would need to provide to a financial institution. I know Community Futures is fairly similar to us, with slight differences in what we collect, but just to give you a good idea of when you're coming in, what do I need to bring to the table? What does my banker, what does my lender need to see for it? So startup businesses, income, we need to verify what your income is. That's, when you're starting a business, obviously a little bit more difficult because you're potentially going from full-time employment to technically zero. Self-employment, we have to use a 2-year average for clients when they're applying for lending. So if you're recently doing that switch, your cash flow projections are gonna inject what your income is. So we can use an average of that. Important to anything outside of RBC that we're not able to verify, so any bank accounts, investment, mortgages, etc., that you have those kind of statements we all need to see as well. If you're owning property, any property tax assessment, because that's proof of who the actual owner of the property is. If it's you own solely, you share it with a partner, just for we are evaluating it properly. So so that's a bit on the personal end as to what you need to bring in. On the business end, documents that we have to gather. So financial statements, So in a startup business case, that's gonna gear around your 2 years of cash flow projections. I don't know if Community Futures, are you guys 2 years or just?
No, our 12-month, very similar actually to what Morley showed for the cash flow. We
Okay.
give out very similar to that, and the format that he sends you is what we give to our clients. So all we need is that 12 months and the business plan are our two key things that we
Okay,
need.
so ours is just a little bit, one extra year, so just analyzing more what your first year did, what's gonna change, where are you gonna tighten up stuff in the second year, basically. So 2 years, still your business plan, startup or existing, it's always a good idea, like I mentioned before, about keeping that business plan updated, especially if you've got an added product you're doing, added service, a change in marketing plan, whatever it may be. It's just to keep check and balance of what your business is doing. So we can request that. And then if you are purchasing equipment, building, vehicles, whatever, we need a copy of that bill of sale that's coming too. In the business world, for example, you're leasing a building, we may say we need a copy of that lease agreement. If you're looking for financing to complete leasehold improvements, we can tailor it to the timeline as to what your lease is. So if you've got a 7-year lease, potentially we can amortize that loan over a 7-year period for you guys. So it'll vary depending on what you're doing and what you're purchasing. We need to make sure accurate value is being asked for in the loan versus what the value of it is. And obviously all the information that comes to us in that regards is confidential. It's kept solely to RBC. I review it, my credit team reviews it with me. And then potentially say I am unable to do the deal. I've always talked to clients and say, can I talk to Jason at Community Futures? Are you okay if I share your information so I can get a second opinion to partner together to work to help clients out? So that checklist is in there, which is super informative, just to keep you on target as to what you need to bring in, it helps out. So building your support team. So new, existing, again, it doesn't matter. This is something that's going to be developing for you. So starting out, important, surround yourself by industry professionals. Surround yourself, take knowledge from people that are in the industry already. Ask questions. We're here to mentor. Use those mentors at your ability. Attend networking events. Go to industry association things. So this is providing you guys an amazing opportunity. You've had a wealth of mentors come present to you. You have all of our contact information to reach out to after. So it's giving you a huge leg up. Join different things like Chamber of Commerce, for example, and then you'll have those business associations surrounded around you. Your Kinsman clubs, your Rotary, your different types of service groups. Again, those are largely small business-based owners operating and functioning in those. So again, a huge wealth of knowledge, partner experience, mentoring that they will provide to you as well. And then a third part, your accountants, your lawyer, your banker, all adding to your professional team. So not every accountant is going to work with every business, not every lawyer, not every banker. So talk to them. Talk to more than one sometimes. Seek somebody who is familiar with working in your industry, who's going to give you the best knowledge. Others are going to have different experiences in different areas. So make sure if you're opening up a restaurant and your accountant you go to is more into a retail sale base of what they work with, ask them for a recommendation of somebody who's more versed in the restaurant ownership. So put your feelers out there when you're looking to that. Again, that's going back to your mentors. Who do you use? We're in the similar industry. Who's some accountants you've talked to? So source that. Your bankers, any of your lenders, we all have external contacts. So talk to us too. We have some references, a couple names of people you can look at for that. But that's all a huge part of your support team. I work closely with my clients' accountants, not hugely as much with lawyers at this point, more when you got into kind of a succession planning stage of when you're maybe exiting out of the business. Your lawyer, accountant, again, are going to hugely work closely with me. I have clients, as soon as their financial statements, their year-end stuff is done, one copy goes to the client, one copy comes to me. And so it's just an agreement that we have set up, and it's just an easy flow process. And if I need anything, the client often, 9 times out of 10 is, can you just phone my accountant to get it, because they've got the copies of everything. So it's nice to have that close working relationship. So that's an important piece that I like to know too when I'm working with my clients is, who is your support team? Who's your team of people? Who's your accountant? Who's your lawyer? If you're a new business, who do you use for mentors? So where does your support stuff? And mentorship is oftentimes put in your business plan as well, who you have in there to work with, so.
Okay, so the presentation today was fairly general in nature. You know, everybody's situation is different, so you know, we'd be happy to answer any questions that you have, as well as if you did want to meet with Angela one-on-one, her contact information and business card are in the folders. So thank you for your time tonight. Hopefully you were able to get a little bit of value out of the session, and we look forward to hearing from you, and good luck with the competition.